So let's just say there's a company that's worth $155 million as of last April of 2020. Regular company, not a company you think about a lot. Their stock is worth roughly $2.57. Think about if that $155 million company 9 months later is worth not $1 billion, not $5 billion, not $10 million, $29 billion, 188 times more than what it was worth 9 months later, simply because a Reddit group users called Wall Street Bets decided to take on the big Wall Street hedge fund managers, go to war because these guys decided to short sell GameStop. They said it's not going to happen. We want to expose you. And these guys ended up costing them billions and billions of dollars just in the last few weeks. So we're talking about the company called GameStop. Now, this last week has been a very, very rough week for Wall Street. Wall Street got Wall Streeted, the bully got bullied, and GameStop, that today's worth $325. If you come over here, Mario, you will see in the last 12 months, the lowest the stock was $2.57. The highest it went was $4.83. That's 188 times we're talking about. Look, GameStop has been the highest short selling company of the year. Last year, one of the biggest short selling companies of the year was a guy named Elon Musk and Tesla. Tesla last year, believe it or not, short sellers. Elon Musk hates short sellers. Matter of fact, I think he tweeted something about short sellers. He says, "Here come the shorty apologists. Give them no respect. Get shorty." He has no sympathy for shorty. But what is he alluding to? If you go a little bit closer, here's what he says. You can't sell houses you don't own. You can't sell cars you don't own. But you can sell stocks you don't own. What do you mean by that? This is BS. Shorting is a scam, legal only for vestigial reasons. Now watch this here. Stay right here with me, Mario. Okay, actually turn around because I want to show this, because I don't think people are going to believe this. How much you think short sellers from Wall Street lost betting against Elon Musk last year? Again, short sellers. How much you think they lost betting against Elon Musk last year? $1 billion? $5 billion? $10 billion? $20 billion? You think that much money, Pat? Watch this. According to CNN, Tesla short seller. This is an article from this year, January 6, 2021. Tesla short sellers lost $40 billion in 2021. Elon Musk made more than triple that. Think about how 2020. Think about how much the short sellers lost. So there's a whole business of companies that short sell. So what we're going to do in today's episode is the following. Number one, nothing about what's going on today will make sense to you if you don't know what's short selling and what's margin. Those two are important for you to know about. So we're going to cover that here in a minute. I'll go into that first. Then we need to know who's involved, what topics are involved, and then a timeline of what happened with Robinhood and Reddit. Those two data you need to know about, and a certain capital like Melvin Capital, Steve Cohen, a bunch of these other companies, you know, who bailed out who, what mentor bailed out his mentee. There's a whole storyline to that we got to get into. And how's Michael Jordan involved in this? Because some of his investors, anyways, but let's get right into it. The first thing I want to do to you for understanding the basics of what is margin. There's a movie called Margin Call. It's a great movie to watch. But let me explain to you how margin works. So here's what margin means. When you hear the word margin, just think about margin equals debt. So for example, you go to E-Trade, you go one of these brokerage accounts, and you put up $100,000 and you want to buy a share of XYZ that's worth $10,000, and you take your $100,000, you say, you know, if I buy $100,000 of this $10 share, I get 10,000 shares, but I want more. Hey, Mr. Brokerage E-Trade, can I get some debt, some margin? Well, since you put up $100,000, the current Federal Reserve requirement is 50%. The most we can do is 50%, which means we can match you $100,000 for a total of what? $200,000. No way. Yes. Which means instead of buying 10,000 shares, now I can buy 20,000 shares at $10 for a total of $200,000, right? So you're like, oh, this is so cool. This is awesome. I am leveraging my money. Not a big deal. So what does this look like? Well, let's just say the stock goes from $10 to $20. What happens? Here's what happens. Your $200,000 goes to $400,000. The brokerage house comes and says, hey, you got to pay that $100,000 back to us, plus fees, commission, interest, whatever they have, depending on the timeline. You end up netting around $300,000. Now, why is this such a big deal? Well, If the stock went from 10 to 20, that's 100% growth, right? Yes, but only if you would only put $100,000, not gone on margin. But you put, the stock went from $10 to $20, but you also borrowed another $100,000. You came out with $300,000, so you didn't make 100%. You made 200%. That is why people do margin, which means somebody can make twice the money sometimes by leveraging, hence margin equals debt, and using the brokerage company's money. And then you pay the fees and commission, right? Now, what happens is the following that's pretty scary. And I've gone through this before in my 20s. It is scary as an understatement. So now let's just say this $20 stock goes to 15 bucks. This $10 stock goes down to, let's just pick a number, $7.50, which means it goes down 25%. When this happens, typically the brokerage company, when it gets to around $8.50, will call you and say, hey, we just want to prepare you, your stock's gone down and you got to be ready for it. But at around 25%, some brokerages are 35%, but I'm just using 25%. At around 25%, if they don't hear back from you, you get a margin call. And sometimes they just go out there and they sell the stock without even asking you because they're protecting their money. Here's what happens. The stock went down 25%, right? From $10 to $7.50, it's down 25%. So that means that $200,000 now went down to what? 25%, 50K, it went down to 150. You started off with 100, you borrowed 100. The brokerage says, hey, give our $100,000 back. You're like, oh, okay. So I give the $100,000 back to them. What's left to you? 50K. The stock only lost 25%, but you lost 50%. Why? Because 25% here, 25% here, because you went and borrowed money. So you ended up losing 50%, okay? That's what's margin call. And that is very scary when that happens. Now, the thing about margin call is there's limited loss, right? There's only so much you can lose. Now, when it comes down to shorting can get people to take their lives, which is something that happened in a story that we'll talk about here in a minute. Shorting is very scary. Let me show you what shorting is. So here's what happens when you buy stock. So when you say, oh, I'm long on XYZ stock, meaning I'm banking on this thing's gonna go up. Or I'm short on XYZ stock, meaning you are banking on this thing going down. So what is long? Long is you say, I got $100,000, I buy XYZ stock, I buy it at 10 bucks, I get 10,000 shares. I'm hoping this thing's gonna go up. Great, that's what I'm doing. Short is you say, I don't think this stock's gonna go up. I think this stock's gonna go down. No problem. So you borrow, okay, money from the brokerage house and you say, look, I want to do $100,000 of XYZ stock. Go find me somewhere out there that's willing to sell it to me, lend it to me, borrow it, and you get it at 10 bucks, and you wait for what's going on with the market because you're shorting. You're banking on this $10 going to $7, right? Like all these short sellers were banking on Tesla going down, the stock going down, right? Well, let's just see kind of what happens here. If in this situation, the stock goes down to $5, this guy who was long loses $50,000 because when he bought it, it was only 10 bucks. But this guy that bought it at 10 bucks goes down to $5. Here's what happens. He tells his broker, go buy those same stocks at $5 now, not $10. Now I have $100,000 that I put in, but I only spent $50,000. But I'm getting $100,000, which means what? I made additional $50,000. You're kidding me? No, that's when the market goes down. So short sell, we have short seller billionaires in America that all they do is shorting companies. I'll read you here in a minute an article about Herbalife that's pretty scary, written by this Variety articles, brilliant article. But let's go to the scarier side on what could happen here. The long guy, he's buying and holding, hoping, I hope the stock goes up. This guy's banking on the market going down. This is the scary part about what just happened this last week, with these last couple weeks with GameStop. So let's just say this $10 stock doesn't go. Remember, this thing went up 188 times. Say this $10 stock goes to $100, okay? If it goes to $100, this guy who bought $100,000 worth, his $100,000 goes to what? $1 million, okay? So he's happy. He made what? $900,000. Good guy, he's happy, good for him. What happens to this guy? Well, this guy was banking on the stock from $10 to go down. The commitment he made on the $100,000 was at $10. The stock goes up. He's only put up $100,000. The stock goes up to $100,000, which he has to now buy those same shares at $1 million, which means he lost $900,000. You see here, the scary part about these two is the following. Remember how I said margin call? It's a limit where how much money you can lose. The most this guy can lose is what? $100,000. The most he can gain is what? Unlimited, right? Depending on how big the company gets. The most this guy can make is how much? $100,000. But the most this guy can lose is how much? Ready? Unlimited. That is the scary part about short selling. So you may want to come back here to me. So you got margin call and you got short selling. This short selling game is not a fun game if you don't know what you're doing. Well, these Reddit guys didn't like it and they went up against them. They found out that these short sellers announced we are shorting GameStop. They went on this group called Wall Street Bets. There was only 100,000 subscribers a few years ago. Now it's 5.2 million subscribers. They started talking smack about these hedge fund people. They said, let's go buy. And they forced this stock to go from 257 to what? 483. And in the last 3 weeks, from 19 bucks to 483. And it's been craziness, right? Lots of money's been made. But who's been hurt and what is the timeline? So let's go through this because I think this is the most important thing for us to look at on what's going on. So here's the timeline of both the Reddit, Wall Street Bets, and Robinhood, and a couple other events. So January 2012, Wall Street Bets subreddit is created by Jamie Rogozinski, an entrepreneur living in Washington, D.C., and his motto is playful with little hint of what is to come, inspired by earnings seasons, let's play. Later on, the motto will change to something more sinister sounding, like it's like 4chan found a Bloomberg terminal, and the discussion board will become known by shorthand WSB. Okay, so just remember, every time you hear WSB, it's that Reddit account, Wall Street Bets. Okay, later on, 2012, the culture Wall Street Bets takes a shape, even though it's unorganized and small, it attracts people who weren't interested in relatively boring investment like index funds or in the traditional as I mentioned. Like, anyways, it starts attracting different kinds of people, right? Even one popular video early in the post is a great video in which investor Mark Cuban says diversification is for who? Idiots. Okay. April 2013, Robinhood is founded in San Francisco Bay Area, and initially was just a way to track stocks, but the company is building towards the idea of being an online brokerage with no commissions. Key, no commissions for the little guy. The problem here is their investors are now the big boys. So their clients are the little people, the small investors, but their investors are the big dogs of Wall Street, New York. So it targets younger potential investors with a mobile-only trading platform and to go on to become a favorite at where? WSB. Let's continue. October 2013, Robinhood wins approval from the financial industry regulator, allowing it to expand beyond just tracking stocks. Okay, this is big for them. February 2014, WSB surpasses 5,000 subscribers on Reddit. Only 2 years old, but they get 5,000 subscribers. Good for them. They're growing and they're doing what they're doing. Discussion of earnings, advice about how to trade off the news, and tales about a kid who lost $100,000 about betting wrong on Twitter. December 2014, after years of development, Robinhood will launch its first trading app on Apple iOS store. Reviews are positive. I think even Ashton Kutcher, a bunch of different people in Hollywood, business, sports. By the way, I think this is a great app. I myself think this is a great app. I just think they got themselves in trouble. So this takes off, December 2014. April 2015, by now, popular new features beginning to appear on WSB frequently. The label of YOLO, short for you only live once. It starts to capture culture basement, Okay, let's continue next. Robinhood wins the Apple Design Award, June of 2015. August 2015, they go on Droid. Next thing you know, their users within weeks nearly doubles, triples from 67,000 to 176,000. And WSP, meanwhile, now has what? 18,000 subscribers. 2015, bigger names start taking notice. Martin Shkreli, which is one of the most hated pharmaceutical executives, best known for the time raising drug prices, gets an invitation to join WSP while he's doing a Reddit Q&A. I'm looking at it, Shkreli said. Response. His personality ends up as clear as WSP subscribers, and eventually someone with his name becomes a WSP moderator. Robinhood wins a design from Google, then 26. Anyways, things are developing and growing. They get to 100,000. Robinhood is 200,000. This is January 2017. And they're still growing. They start raising some money here. $110 million in 2017. They're now worth a $1.3 billion company. They're now a unicorn. WSP is still growing, doing their parts. So let's kind of speed up the process on what happens. They raise more money. These guys get $363 million of money. Now they're worth $5.6 billion in 2018. WSP now in 2018 has 300,000 users, and Robinhood now has 664,000 active users. They're growing. They're both growing. All of a sudden, some issues start happening. Retail is slumping nationwide, and now GameStop comes in. GameStop shares drop sharply after the company announces poor earnings, and it cancels this. Mike Hickey, an analyst for the Research and Investment Bank Management benchmark company, says he cut his expectations for the company as the business burns to the ground. WSP is ranked number 2 now on Reddit. As of April of 2019, they're getting bigger and bigger and bigger, but also increasingly heated debates that is becoming its hallmark. Later on, it'll become number 1 here soon. Robinhood receives another investment, $323 billion. Now there's $323 million. Now they're worth 7.6. Michael Burry, an investor made famous for the movie or the book, The Big Short, announces that he has acquired a stake in GameStop. Before long, WSP user takes notice. September 2019, tactics of Robinhood and often other language on WSP get more scrutiny from NBC News anchor outlets, and they start getting a little bit of challenges here, including screenshots boasting about major losses and frequent jokes about what? Suicide. That's when they get a little bit of trouble on their side. In the same month, a WSP user publishes a screenshot with a list of GameStop trades and references to Burry's position on the same stock. How they found that, obviously, we don't know, but they found it. You can do research and find out. December 2019, Robinhood launches a new feature that allows users to buy fractions of shares, making it easier for people with a limited budget to invest in the company. You've seen this video on Facebook. It's got a ton of views. It's an ad. March 2020, now we're talking. WSP's now got more than 1 million subscribers. During that time, with the pandemic, Dave Portnoy, the founder of the Barstool Sports website, a frequent target of criticism for his company's handling of gender and racial issues, he turns to the stock market as a replacement for sports betting and has a large audience on social media, which, by the way, he commented on everything that happened with Robinhood and got 4 or 5 million views on his Instagram account. Portnoy was not holding him back, said these guys need to go to jail. It's not pretty. Same month, Robinhood experiences a spike, surpassing 2 million users, according to Apatopia, et cetera, et cetera. Now GameStop price hits a low of $257. Remember how we talked about it earlier? It hits $257. Robinhood raises $280 million. Now it's worth $8.3 billion. Then over here, a problem takes place. In June of 2020, Robinhood user Alex Kearns, 20 years old, dies by suicide in Illinois after he believed he had lost hundreds of thousands of dollars, which was a mistake. In a note, he blamed Robinhood for suicide. This is obviously not good PR for Robinhood. November 16, 2020, Ryan Cohen, an investor and entrepreneur, launches a campaign to GameStop to reinvent himself. I think he ends up buying $76 million worth of the company, 9 million shares, $76 million. And he was a guy that sold his company, what is that one company called with the pet food company? Chewy. He sold it to, I think, a pet company for $3.35 billion. And he decides to get into this, saying we have to go from being a brick and mortar to what? More like Amazon. Okay, great. December 2020, Robinhood hires investment bank Goldman Sachs, et cetera, but it is also fined $65 million by SEC for misleading investors about how it makes its money, and that's not good for Robinhood. So they keep getting a black eye. Now we are here to today. This is where everything happens. January 14, 2021, the battle between GameStop short sellers and WSP user begins in earnest as purchases by both sides sends GameStop surging by 27% in one day. CNBC Jim Cramer credits the Reddit users. It's odd. It's incredible to watch. I think they're succeeding beyond their wildest dreams. January 19, not a smart comment to make. Citron Research, a short selling firm, sends a tweet that GameStop buyers are suckers at this poker game. You're poking is what you're doing. You're pissing them off. A comment that only seemed to encourage WSP users even more. Citron later calls Reddit an angry mob and vows to quit commenting publicly about GameStop. January 22nd, GameStop trading becomes so volatile that it is halted at least 4 times. Its stock surged 51% in a day and closes at a then record. Then WSP users celebrate and vow more, with one user writing, you ready? Guys, please hold. I got to pay off my student loans. Just crazy stuff going on with GameStop. Shares surge again, and then there's the short squeeze that we talked about earlier. And then January 27 to 28, everything seems to reach a boiling point at once. WSP goes offline for several hours, and its moderators catch up to the volume of margin calls. 5.2, they're now at 5.2 million subscribers. Anyways, it's not looking pretty. While all this stuff is going on, it's important to realize that Janet Yellen all of a sudden comes out and says, wait a minute, this is what is going on over here, and she's been assigned by Biden, this is not good. Now we need to investigate Bitcoin. She traps Bitcoin because some of these WSP people are also Bitcoin people, so they're like free-minded, leave us alone, you can't tell us what to do type of a mindset. And then there gets a link between Janet Yellen, who did speaking for these guys and got paid $7 million. And one of the companies that lost a lot of money is the one that she got paid $810,000. So now there's speculation that she is really getting involved to stop the whole thing, because this is now hurting the same people that paid her the $7 million, which is the big, that's what the speculation is, right? Then AOC gets involved, and AOC says, this is unacceptable. We need to know more about Robinhood app's decision to block retail investors from purchasing stocks while hedge funds are freely able to trade the stocks and they see fit. As a member of the Financial Services Committee, I'd support a hearing if necessary. Elon Musk down here says what? Absolutely. You know who else agrees with her? A person that would never agree with her, Ted Cruz. And she says, listen, Ted, you can sit this one out. I don't like you. But any other Republican that wants to come and join me on this to go against Robinhood, let's go ahead and do it. By the way, today Robinhood is a $20 to $30 billion company. It's not a small company. So all of this stuff has happened in the last few weeks, right? So when you go in, you look at the fund, some people are taking shots, Reddit tweets out saying, can't wait to explain this week to my therapist. It gets 857,000 likes. They're not playing along and realizing, hey, we got to kind of take advantage of this and play along, because this thing can really, they're obviously getting a lot of eyeballs, which is good for them. Elon Musk plays even more, just puts the hashtag Bitcoin in his profile, and within 1 hour, Bitcoin stock goes up 20% to 37,229. You're kind of seeing what's going on. So as we're looking at all this stuff, how did these short sellers do what they do? Because Melvin Capital was one of the ones that shorted GameStop. They are saying they lost somewhere between $500 million to a few $1 billion. Melvin Capital got bailed out by Ken Griffin from Citadel and Steve Cohen from Point72. They injected $3 billion into Melvin to prevent it from collapsing. This is not small time stuff right now. By the way, Melvin Capital is a $13 billion company, $12.5 billion asset under management. They were bailed out by Steve Cohen, who was the founder of Melvin Capital's former mentor. Anyways, long story short, they came out and said, we got to bail these guys out. And the next thing you know, a bunch of these guys pulled out 100% of their money. Oh my gosh, we can't even do anything with this anymore. So Melvin Capital pulled their money out. You have another company that pulled their money out. Just a bunch of people are like, we're giving up. Andrew left from Citron, 100%. By the way, the stock of GameStop was shorted 130%. Let me say this one more time. Imagine there's only 10 shares of a stock, but 13 shares were shorted. How do you short 13? You understand what I'm saying? Like, it's ludicrous what happened during this last 3 weeks. So what does all this stuff mean to you and I, and what's going to happen to Robinhood, because they're getting sued and a bunch of other stuff is taking place? Here's what I have. These are my thoughts about what I'm thinking about on what's going on over here. Number one is we just had an election, and we learned what happens if you say stuff that the government doesn't like. They silence you. How do they silence you? They silence a lot of people on Twitter. You can't put this, you can't put that, you can't put that, okay? But social media and the voices had so much power that the government came in and said, hey, Twitter, what are you gonna do about it? You gotta silence these people. What does it mean if this happens today? The last 3 weeks, we learned social media users, day-to-day people, have a lot of power because they have a lot of voice. But the Wall Street guys may not have 5.2 million subscribers, but what do the Wall Street guys have and hedge fund people have is they buy politicians. So they have power and influence. The Reddit guys have a voice. That war, here's what takes place. On one end, if we saw election that was about silencing everybody, this could lead to the government silencing a lot of people on Reddit. I don't know what they're going to be doing, but they're sitting there saying, well, this is not acceptable. We just lost a few billion. We can't be losing that kind of money. And the people they're complaining to are the same people that they supported their campaigns, and they need their campaign, they need their money to be supported on the next election. So that's number one. Let's set that part aside. Next one here. Okay, so one side is coming out saying, overregulate, we need new regulation, we need new regulation, we need new regulation, that's what we need to be doing. The other side is saying, let the market decide for itself. One side is saying, no, you can't do this because people are losing money, they're committing suicide. Yeah, anytime you buy a stock, someone makes money, somebody loses money. It's a zero-sum game. It's not like everybody who buys, they make money. No, guess what? The hedge fund guys lost some money. That's fine, they lost some money. No, but it's not fair because these other guys that are doing what they're doing, they're not professionals. They don't know what they're doing. Let the market decide for itself. It tells you the government wants control, and they're hinting at controlling Bitcoin. Bitcoin folks don't think that'll ever happen, but the government's saying if we want to take control, we can, and they're just putting a lot of threats. Don't regulate, let the market be left alone, do regulate. By the way, remember the margin call earlier I gave you that I said it's 50%, like if you have $100,000, the brokerage will give you another $100,000, which is 50% of the total. Remember that number? That number came out in 1974 by Federal Reserve, right? You know how many times that number's been changed? 23 plus times, which means what? They can change it again if they want to, and there's nothing anybody can do about it. Next point, the bully got bullied, right? We all know the bully got bullied with what took place right now. Is this going to stop? The only way the bully is going to be able to continue bullying is if he gets the government to protect them. If they do, because the bully doesn't like it when the rules are against them. They love it when the rules favor them. They don't like it when the rules are against them. So I don't really know what's going to be taking place right now with that. What I can tell you is the following. There's really a handful of people right now on what took place with this. There are those who know what they're doing, okay? And they may have lost some money. They'll come back up because they know how to play the game. There are those who have no clue what they're doing. They got lucky. There are those who are scared and they're sitting on the sideline. There are those who are not going to go in. And then there are those that are researching and learning right now to see how they can capitalize off of this. All I can tell you about this is the following. When you play a game that you know nothing about, you can get lucky. But if you keep playing the game that you know nothing about, you can eventually burn. Now, for me, when I got into investing into the stocks years ago, I was 20 years old or 21 years old, I bought Nike stock and I got margin from E-Trade, and the stock went up 20%. I didn't make 20%, I made 40%. I sat there and I said, wow, this is awesome. 6 months later, I played the same game with margin. I didn't pay attention. I didn't put a stop loss. I lost all my money in the market at a point where I couldn't afford to lose all my money. So there's going to be a lot of people today that get lucky, a lot of people today that lose money. My biggest recommendation to you is to go research and learn, because sometimes when you lose, the biggest lesson about losing is the fact that you're forced to learn. I was forced to learn. I hope this entire mess of the last week forces more of us to get educated about how money works. Because if we don't get educated about how money works, this is not going to go away. Very good thing for some people, very scary thing for a few people. Robinhood's black eye is not going to go away. These Reddit folks are not going to go away because they're very loud. And the hedge fund guys are not going to go away. This may be just a little battle that the Redditors won. The war is yet to be determined. And the war is not, 1 month or 1 week or 3 months. The war is a year, 5 years, 10 years. The next 12, 24, 36 months is going to tell us who's going to end up winning this war. Having said that, if you watch this video, I got a video I did 4 or 5 years ago called 20 Rules of Money. If you've never seen it, click over here to go watch it. And if you have any thoughts on this, I'd love to hear from you. Send me a text at 310-340-1132. Once again, 310-340-1132. I want to hear from you on what's your biggest takeaway of what happened the last 3 weeks. Take care, everybody.